Good afternoon, welcome to Business. President of policy think tank Imani Africa, Franklin Cudjoe, says it is early days yet to jubilate over the appreciation of the local currency, the cedi, against other major trading currencies. The cedi has wrestled positively since the beginning of this year, which many attribute to a significant drop in trade with China due to the coronavirus epidemic. Even though Bloomberg reports the cedi weakened by about 0.7% in the last 2 days, trading at 5.375 to a dollar yesterday, Franklin Cudjoe disclosed that the FX committee set up by government will be delivering on the mandate within the 3-month duration assigned.
The outlook on the economy for 2020 is indeed looking cautiously optimistic as well. And I think the point about the stability of the currency is quite interesting. I mean, let's not mince words. The stability of the currency so far is not necessarily due to any particularly stellar effort by the central bank, even though the forward sale of currencies are useful. But overwhelmingly, we all know what it is. I mean, the plummeting fortunes of China, and to think that most of our traders are no longer externalizing our dollars outside of the country has also impacted. I think it is early days yet to start jubilating. But of course, you want to take advantage of it right now, study it properly, and see where there are opportunities to strengthen policy. So by all means, the policy of the central bank is useful. I think it diminishes people's appetite to keep dollars. And as has been shared in the presentations, keeping dollars in the bank doesn't necessarily mean you are growing your money. So it is good for these kinds of interventions to be done. You want me to tell you something about the Forest Committee? Well, we were supposed to just look at the transparency within the currency flows. As far as we are concerned, we've met once or twice, and there are other meetings going on. There are other studies going on. So it will be useful for us to wait for whatever we are studying in order to add to what the central bank is doing. It's complementary, really. The central bank is part of the committee, and it's a 3-month window that we have to finish our work. So the work is still in progress, and the central bank is strongly represented on the committee, and I think after 3 months we'll know what exactly had happened.
Now, fund management company Access Pension Trust is calling on the National Pensions Regulatory Authority to allow various fund management firms in the country to diversify their investment portfolio. This diversification will mean pension fund managers can invest across the shores of the country in what they consider as more profitable and low-risk venture. Speaking to Joy Business at the Pension Strategy Conference to push for policy amendments for diversification, CEO, Chief Investment Officer Nana Wiafe Boama, believes it is time for the regulator to grant them an opportunity to yield dividends for contributors.
And the whole, idea over here is diversification. We are not saying shun this asset class and put all your money in this particular asset class. Diversify. Equities, exposure to equities among pension funds, it's about 2%. A paltry sum, very, very small. We feel, we can do, more. MPRA allows us to invest up to 20%. But why aren't we? Fundamentals of the companies, on the market are great. Fundamentals are great. But then prices obviously respond to short-term demand and supply. If all pension fund would decide to allocate just about 5% of their total portfolio to equity, can you imagine the rally that could spark? 5% of 15 billion is about 750 million going into equity. Last year, total trade on our market was less than 700. That is what pension fund can do, for our market. Like I said, companies' fundamentals are great, but everybody, is playing a wait and see. If we decide, to invest, and we have the leeway to invest because MPRA says we can do 20%, but this fixed income safety mentality is holding, people back. But the point I'm making is, fixed income or government treasury is not, safe as we think. If you take inflation of 8% out of yield of 18%, you have 10%.
That's it for business. I'm coming back shortly on the marketplace with more business. Up next is sports.